Hi there, we're live at the New York Traders Expo. I'm Stephanie Kammerman, the Stock Whisperer, and I am here with Marvin Appel from Signal Alert. So let me just tell you guys that Marvin's father invented the MACD.
Yes.
This is so awesome. I wish my father invented that. How was that growing up?
It was fun. I helped him out with the algebra as needed, but yeah.
Did you have like stock charts all over your house?
Not all over the house, but all over the dining room table, yes.
Wow, that's so cool. So, I mean, tell us about MACD and really how you use it.
Okay, well, as I talked about this morning, yeah, MACD can be both a momentum indicator and an oscillator. In managing money for clients, we mostly use it as a trend following indicator.
Right.
So, when MACD is rising or when it's above zero or when it's on a buy, that's when we are more confident about whatever market we're charting. And if it's on a sell, or falling or below zero, that's when the warning flags are on.
So when did the warning flag go off? Like what date did that happen in this last correction?
Okay, well, with the wisdom of hindsight, it went off a few days before the bad week, before the week when it lost.
So was it
that Friday,
January 30th?
I think that's it. Yes. So, all right, but it was subtle. I have to be honest. All right. You had to really be watching. There was a subtle sell signal that occurred earlier in the month. That because the market was in the midst of a strong uptrend then,
right,
you would have bypassed that and waited for the second sell signal, and that second sell signal occurred January 30th.
Okay.
So it would have been a timely exit, but it was a very subtle thing. Obviously that was a tricky decline because both the price and MACD and the advanced decline line, on January 28th, all made new highs. So there really wasn't a lot of warning in some sense.
Don't you find that always happens before a correction? They always make a new high? I've seen that many times, and then take it down. I always feel like they're kind of faking, they're getting the shorts squeezed, and they're kind of faking new investors in before they take it down.
I think that's often true. In fact, 2007 high was a new high. But sometimes, if you're using MACD, you can get a negative divergence. So the price might make a new high, but MACD fails to make a new high at the same time. Sometimes it's a warning sign, for example, that occurred in 2011.
Right. So
it's not always a fake out, but all too often it is, right? I just heard a speaker say that the market's goal is to inflict as much pain as possible, and certainly.
Well, our job is to protect people. So when
That's
we
right.
come back, we'll talk about your newsletter and we'll talk about bonds.
Okay.
All right. Thank you, Marvin.